What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit that subscribe button and join us on our journey to the biggest shift in wealth ever, financial revolution, as we make our way through a pretty terrific little bear market sell-off. As usual, we're having another bloody Monday. It seems like Mondays tend to be, I think that's been one of the most popular Monday titles, Bloody Monday of some sort. What we're talking about today is obviously Bitcoin's price. We're going to talk a little bit about the stock market as it relates to Bitcoin. We're talking about cryptocurrency market cap, dominance, a little bit about the news that's maybe driving some of this on top of some of the overall fear. And then I really want to just talk a little bit about the psychology of what's going on here, the bigger picture, how this can all help play out. Again, this is not professional advice. It's not financial advice. However, this is just my opinion. This is my journey through this incredible revolution, this incredible opportunity. And that's what this is at the end of the day. This is a very, very exciting opportunity to be a part of. And we'll talk about why. So the big news, obviously, is Bitcoin's price, which Bitcoin is still driving a lot of it still drives the price in the entire crypto market because Bitcoin, for the most part, is the on-ramp into the rest of the ecosystem. You almost cannot go from fiat, US dollars, euros, whatever, straight into crypto. You have to buy Bitcoin first or Ethereum first or Litecoin first or Bitcoin Cash for the most part. And Bitcoin and Ethereum being the big two, Bitcoin being the biggest. That's why it still drives the big price. Now, that's going to change this year, okay? So, just jumping ahead here, Bittrex is going to add that feature. They're going to allow you to use US dollars and go straight into altcoins. It's unclear if it's going to be all the altcoins, but they will allow some altcoins to come in, right, that they've cleared with securities laws, allegedly, and allow people to sign up again. So as this starts to come in, you're going to see Bitcoin lose its dominance. So for now, Bitcoin is really the index of crypto for the most part, but that will change over the course of the year. All right, so that's something to keep in mind. And what that means for the most part is that Bitcoin's allocation in your portfolio may change. It may stabilize in price, which means that it could be a good hedge against overall volatility. It could also mean that it doesn't have the same growth potential as other coins, but it also may not go down as much if it attracts more of the, as they say, market tamers, which is what futures was supposed to do, but that has not played out at all. So keeping that in mind with Bitcoin, if you watched the videos last week, we're watching these levels. So this was a retracement down to 61, I should say. And it popped through there. So we're on the 4 hour now. And the next levels to really watch are, I'm going to move my video over here so you guys can see. The next levels to watch, in my opinion, are between right around 5,600 up to, let's say, 6,000. I think this is an interesting buy zone. And then the real big next buy zone is at this yellow bar, which is at 4,900-ish. And there's some stuff going on with the charts. There's some pretty good resistance on this level, right? It pushed the price pretty far down versus the 55 to 600 wasn't quite as strong because it didn't push the price down nearly as much. It just held the price, which is a big difference. That's why this is getting a lot of support right now. It's 7,200-ish because it pushed the price all the way back down, right? So this resistance level didn't just hold, it actually dropped the price. That's a really important difference whenever you're setting up your buy zone indicators for strength of potential support moving forward. This doesn't always hold true, but that tends to be how you can apply relative strength to different things. So as we watch this price, we're going to see it go down and bounce around, and you're going to see it maybe stabilize over the next few weeks or whatever. The volume is really the name of the game. And if you don't watch the volume, you should. You go on TradingView and just look up Bitcoin, and you want to see more and more of these big volume bars because this is really the name of the game, in my opinion. I think price at this point is really just, it's kind of a crapshoot because that's just going to come down to how much demand there is, how much true demand, how much support is there from the market. How many people really believe Bitcoin is worth the price it is? And that comes from volume, because that comes from buy orders, comes from sell orders. So the more volume you see at these lower levels, that is going to indicate the bottom, if that's what you want to call it. But I personally am going to layer bids starting around 5,500 to 6,000 area, starting to go heavy around 4,900, and then below that, we'll go from there. But I'm not too hung up on it, because I'm just going to watch the volume. And if the volume isn't there and the price keeps dropping, then I'm going to pull those bids and I'm going to recalibrate in the next 24 hours. So we'll see what happens. But the volume is the name of the game. Demand is where demand meets supply. That is what price is. Right now, the demand is waning because there's news, people freaking out about the SEC, because of China, which we'll talk. There's all these things that are causing people to be like, I don't know if I really want Bitcoin or not. Right? There's regulatory risk, all this. That's what's causing the price. The tech has not changed. Nothing has changed. It's just that all of this, the top part of the bubble cycle, was just built on a demand curve that was mostly speculation and price hopes, and not built on an understanding or a value prop built into the actual product of Bitcoin, of the networks, of all these things. So we're going to see that. We're going to see what the market decides for on the price, and then we're going to go from there. I think the only other thing I would recommend people do is, if you scroll out, especially on something like Bitstamp, where you can see a pretty long history, it's people look at this Bitcoin bubble right now, and it looks like this is the big bubble, right? I mean, you look back in gross revenue or price, it is. But if you click over to the log chart, you can see that the changes in price actually aren't that crazy, especially compared to some of these 2013 price movements. So while from a sheer price standpoint, right, from actual number, right, 10,000 is much bigger than 1,000, it is definitely the biggest. But I personally think this is going to become what this was in the next couple of years. I think that the crypto is going to be the biggest bubble of our lifetimes. It's going to be the biggest shift of wealth of our lifetimes. But this bubble is not it. And I think that we're going to get through this, and it's going to take a little while, and it's going to happen faster and differently than any of us expect. And it's going to lead into a real bubble, 10, 12, $15 trillion bubble minimum, maybe even bigger than that, because that's big enough to really start to move wealth around. And that's what needs to happen in the greater market. That's what happens with demographics. That's what happens over the course of centuries with revolutions and things like that. So I have no doubt in my mind that that's what's going to happen. It's just a matter of how it happens. I don't know. And that's why you got to play the long game. That's why I play the long game, at least. And it gives me at least a little bit of peace of mind knowing that I can't promise, no one can promise you that this is going to go up, or that you have an individual situation where you need certain things to happen with your revenue. This is still massively speculative, but I do think that we are just building the groundwork and the momentum required for a big one. Because here's the difference. Here's what I think a lot of people miss with crypto right now. And I say this because I have a lot of data on Coinbase signups, on Binance signups, on KuCoin. I get an email if somebody says, hey, this person signed up with your Coinbase link and you each got $10, right? If you sign up through my referral link. And so I see how many people are clicking on those links, and then I see how many people are actually signing up and buying crypto, like $100 worth of crypto, and it's a tiny percentage. So the headlines are, hey, 100,000 people a day, 250,000 people an hour on Binance, but like all these numbers. But what I can tell you from actual data is that it's like 3 to 5% of people will go and buy the actual Bitcoin. So when you zoom out and people are talking about how everybody has crypto. The whole, it's It's saturated. This is it. This is the big bubble. Everybody knows about crypto. Everybody can talk about crypto, but very few people have actually bought it. And very few people have bought enough that they're like going, they're freaking out. When I say that, I mean that in the global 6 point whatever billion cents. We're still at a very, very, very small piece. The difference between this and, say, the internet bubble is that in the internet bubble, a vast majority of people actually owned the stocks. In crypto, not nearly as many people own crypto yet because there's just a barrier to entry. And this, I'm looking at the numbers every day. I can, at least from the referral stuff I'm getting, and I compare it to the click rate, and it's shocking how small it is. So maybe that's a good gives you peace of mind, maybe not. But what's happened is that a lot fewer people own crypto than you think, and people are spending way more money than you think, as seen by credit cards, as seen by defaults on loan. So this huge thing was driven by way fewer people, this big run up, than the media wants to make us believe. It's just that those people were spending huge amounts of money, way more than they should have been. And I think that everybody here can probably understand why, probably know people, or maybe it was you. And I'm whatever, no judgment here. But that's the data. It's not a generalization. This isn't a headline. That's just what I see from my inbox. And I measure this stuff because you gotta have data to prove backup statements. Otherwise, you're just, that's just ridiculous. So anyway, that's where Bitcoin's at. If nothing else, I think 4,900 support levels, that's safe. I would not try to time the bottom on this. Wait for a confirmation on the daily chart, which is 1, maybe even 2 candles. Definitely you got to break this bear channel, or, we'll get into the technical of this later this week. Wait to see some confirmation on the way up. Buy on the trend up. Don't try to time the bottom. Just close your computer and wait for the confirmation to come in, even if it's at 1,000. I'm not saying it will, but just wait for the confirmation. Play the next bull run, because I'm so confident that's going to happen. Let's look at Dow Jones quickly. This is the other big gorilla in the room. What's going to happen with the stock market as it relates to crypto's price? Now, nobody really knows, because this whole crypto thing has happened during the biggest bull run ever. This is going to be a really important metric to watch. Dow Jones Industrial, the NASDAQ is going to be interesting because that's more of a tech index. Maybe even the Russell 2000, which is a small business index, or, so to speak. This is going to be very, very interesting. So as the economy, or I shouldn't say the economy, the stock market, because the stock market and the economy are very different. But as the stock market starts to show some signs of weakness, we'll see crypto start to do its thing. There's going to be the big gorilla in the room, which in my opinion is the government, how they react to all of this, how the narrative happens, how geopolitics play out. But this is all building towards something, and it's not going to happen the way anybody knows, right? There's no playbook for this. It's just going to happen the way it happens. And I think that's why I think crypto is more of a hedge against the stock market and the global economy than anything else. And that's why I'm not too worried about this, because it's more of a long-term play. So we'll keep talking about this. The reason I'm not getting into it that much is because, it's only 2 days worth of data. It's still pretty fresh, but we'll keep an eye on that. Now we're looking over here at the market capitalizations from a pure micro standpoint when we're coming down to individual choices, right? So just as a side note for anyone who's not into econ, macro is more of the big picture idea stuff. Micro is the individual and the individual choices. So whenever I say macro, we're talking about stuff that impacts everybody. Micro is stuff that impacts you, right? So when you look at the micro, the big question comes in as the price drops on Bitcoin and crypto. What should you buy? My thesis holds up as it has. I've been talking about for the last month and a half, 2 months. I think protocols are still the way to go, because I think we're so early. I don't think people even know what's going to emerge as the dominant protocol right now. I think Ethereum's getting a lot of momentum. I think Bitcoin is going through a little bit of honestly, I think it's like a branding crisis where nobody really knows what Bitcoin is because it's a storage of wealth, but now it's got Lightning and I mean segments baked in. Is it going to be the be all end all? Is it going to be gold? What is Bitcoin? I think that's actually becoming a problem. Whereas Ethereum clearly has branded itself as the decentralized computing operating system for the new, whatever. And I'm not saying I agree with any of this. That's how good branding and singular vision. That's why that's so good for growth. So I think that investing in protocols, that's what I'm personally putting a lot of my money into. I think ICOs are actually still a good bet if you can find really good teams, really good products, and if you can get into the whitelists and things like that. We'll talk more about that this week. But I think that the top 20 and 30 are going to start to separate. They already are starting to separate. And you're going to see some of these really start to take off this year. And when you look at the dominance, you're starting to see this level out. I personally, I think that you're going to see Bitcoin's dominance start to slow down a bit, but I don't see this changing too much until you get things like Bittrex and other exchanges having not only the fiat on-ramp, but the government just giving the full go-ahead to things like Robinhood, to Bittrex, to anybody who wants to start doing this. Because there's a lot of factors that go into that. And so I don't think that this is going to be an immediate difference. I don't think that Bitcoin is going to lose its dominance anytime soon, because the network of Bitcoin is still the biggest. It's still the strongest. It still has the most developers, the most nodes. It's still got the most stuff working for it. And that's a big part of the value prop for cryptocurrencies, for network capitalism. So I think that it's not... that's not necessarily going to change, but what I do think is that Bitcoin may have a harder time ramping with the same price action as some of these altcoins. So if you are interested in getting the biggest ROI over 2018, 2019, 2020, I'm not sure Bitcoin's going to be the number one moneymaker, but it's also not going to be the biggest loser. So it's just like how altcoins are now. I mean, high risk, high reward. So that's why I'm a big believer in always diversifying, always spreading out your portfolio, not only across coins, but across dollar cost average, across time, things like that. So we'll see. There's just so many unknowns. If Lightning Network works out and Bitcoin becomes a payment system again, so be it. And that's the end of that. Bitcoin just takes over again. If things like Litecoin and LitePay start to take that over, so be it. Or Ethereum becomes the dominant building protocol, whatever. We'll see how this plays out. Now, China continues to drop more and more news on us about how they are going to do everything they can to keep things inside of China. This is not new. We all knew this was going to happen. It's just that when it rains, it pours. They're going to apply the same type of firewall technology that they're using on things like Facebook and Twitter, right? They wall off that tech of those networks so that they can create their own in China. They can control the information. That's kind of what they do. It wasn't really a big surprise how this is going to play out. Meaning they're just going to keep it inside the country for as best they can. Now, what does that mean from an investment standpoint? Well, it means that something is going to win in China. And it's the same way QQ won on China when they stopped using social networks. They couldn't use Facebook anymore. When WeChat crushed it in China because they couldn't something's going to win. And so that's why I think that having some Chinese protocols is a very good idea. I think, Neo is a good idea. I think Qtum's a good idea. Among others, right? I'm not going to get into all these. So we'll see how this plays out, right? Every time they release this, someone comes out and they're like, oh, this wasn't real or whatever. Similarly, domestically, we're getting a couple of banks. Bank of America was in here. It looks like JP Morgan Chase was in here cutting off credit cards. Or, they're cutting off credit cards, but they also, they're doing like the cash advance thing. I'm kind of torn on this, to be perfectly honest, because obviously I don't like it, right? I think this is whatever. But if you're buying crypto with a credit card, that's probably not a good idea. And I'm not here. I couldn't care less what you do with your money. Everybody here can make their own decisions. The choice, go for it. You do you. That's great. But I'm saying, you want to look at why we got this bubble with not a lot of people buying crypto, relatively speaking. It's because people are using credit and they're using money they don't have. So while I don't think that it's banks or anybody's job to tell you what you can and cannot do with your money, I do think that this will help the health of the overall system and the overall markets by keeping credit and debt out of the charts as long as we possibly can. Eventually, it's going to come in. That's kind of what drives a lot of growth in capitalism. But I think that that's just an important thing to keep in mind, especially once we start getting some new growth again. You're going to be tempted to leverage up as high as you can. Stick to your fundamentals. One of which, on my kind of 10 commandments, do not trade or invest money that you don't have, or you can't lose, I should say. It's really, really important. But I think the other big piece of this, or the bigger picture, is that the more these are growing pains, the more this stuff happens, the more banks and credit cards and whoever ostracize themselves instead of embrace this new technology, these new things, the more it's just going to get momentum outside of this existing ecosystem. The more, the price may not recover fast because of that, right? The demand curve will not support it nearly as quickly, but it's going to strengthen it. Because when this goes back up, when it survives, and however that happens, it happens. We're going to do it in spite of all this BS. And guess who the losers are going to be? History would tell you it's not going to be the big, slow institutions that try to control it. It's going to be the revolution. Look at the last 400 years of history and tell you what. I mentioned this last week, the SEC and the CFTC doing a dedicated meeting on crypto. It's supposed to be tomorrow, but they just pushed this back, I believe, a week. I personally don't think that was a coincidence. I think that they're gonna let this price shake out so that they can really hammer it when it's most painful for people. Right? If they come out and say this is the new regulation or this is the new law or whatever. They want to squeeze when it's most painful. So keeping an eye on that, right now, they know that the worst enemy of the average crypto investor right now is time. The longer we stay at these low prices, the more likely people are to sell. And so the more they can draw out the unknown, the fear, uncertainty, and doubt, the more they know people will sell, the more they know the price will drop, the more they know that it'll self-fulfill, hopefully driving some sort of parabolic down cycle. Got to be aware of this. It is not a coincidence that all of this stuff is happening at once. It's not. I don't know if it's collusion or what, but this is they're coming at crypto with everything they got. The good news is there's not a whole lot once we get through all this, maybe in a month, 2 months, 3 months, whatever, there's not a lot of punches that can be pulled. So keep that in mind. Watch that happen. Stay smart about that. And then BitchX adding signups. So we'll leave it with that. I think the last thing I would say is this final tweet. I know a lot of people watching these videos are here to make money. I would say a majority of people are here to make money, and that's fine. You do you. This is not investment advice at all. I'm not telling you when to buy or what to do or whatever, but what I am saying is that find things about this moment in time that help you make more informed decisions and not scared decisions. You are going to go onto social media. You're going to go into Facebook. You're going to Twitter. You're going to go into Reddit. You're going to go into Slack, Telegram, wherever it is you're going. And you are going to see people that are consumed by this fear. They are feeling the short-term pain of what's happening right now and losing sight of where we're going. That is going to happen because this run-up happened really fast, and people are using money that they do not have, or they achieve wealth that they never believed possible, and now it's being taken away from them. It seems like it's being taken away from them, even though it didn't exist 3 months ago to begin with, right? This price was, we're at November prices. It's only February, right? Come on. You have to find ways. You have to find ways to be okay with this price. And it cannot be something that you can't control. Meaning, searching for people to tell you that it's going to be okay, that things are going to go up and you're going to be rich again or whatever, or you're going to make your money back, that is not going to help you. That is not a solution because you can't control that. I mean, if you have a buddy who's got $600 million and wants to come in and buy half the Bitcoin supply, that'll help. And if you have that person, please make a phone call. That'd be great. But what you can control is you can learn about the tech. You can learn about the momentum that's happening. You can spread the word to people you know. The other thing you can do, which is a very unpopular opinion, and most people don't like me to say this, but you can go and you can make more money. I got to find this video. I think it was like October or maybe September during one of the last crashes. And I was talking about how at the end of the day, you have to, if you want to make a lot of money in cryptocurrency, you need to put a lot of money in. Because yeah, you may get some big, huge monster wins where you make a huge amount of money, but over the long term, that's going to work itself out because it's almost impossible to make that kind of money very, very quickly. And you just need to make bigger bets for it to go big. Again, that is betting. It's gambling. I'm not saying it's a sure thing. But the best thing you could be doing right now is not staring at the charts, worrying about when this is going to stop. It's what are you going to do when it starts to go back up? Are you going to be ready? Do you have a plan? Do you have the funds? What are you going to do when things change, when it isn't just going down? What are you going to buy? And if you don't know the answer to that question, don't ask someone what they're going to buy. Go find out what you should buy. Go do the research. Get it done. Make something, really become a strong, calculated investor. Because I can promise you, the next big thing is going to be the one you don't want to miss. That you don't want to be like, oh well, man, I don't have any fiat because, I lost all this Bitcoin in this down cycle and. Well, I ran out of money. This is the one where you should be like on eBay selling stuff and going on the weekends and putting up a lemonade stand or whatever you got to do. Have the cash ready. You will be very, very glad that you did. Okay. And I just can't stress that enough that short-term pain is so much more powerful than long-term pleasure. This is the opportunity of a lifetime. I don't know if this is the bottom yet, but we are entering what will be the big one. This was good. I mean, 20 grand, that was awesome. But that was, think about it. I mean, the exchanges didn't work. I mean, it's a complete Wild West. This next one's still Wild West, but this one's going to be really big. So be ready for it. This is an opportunity. It's not a problem. So with that, we're going to wrap it up. Exciting times this week. I can't wait. Make sure you guys are following me on Twitter, Carter Thomas on Twitter. Always like to have conversations, do some polls, some fun stuff. Be back tomorrow. We'll be rocking. We'll do some live streams this week, of course. And I will catch you guys later. All right, peace out.